Welcome to Resilience and Resolve with Lance Drury.
Hello and welcome back to Resilience and Resolve with Lance Drury, the show that helps individuals and small business owners fight back when the IRS comes calling. Lance Drury is a seasoned tax attorney who's been defending clients for over 20 years with one goal in mind: protecting what matters most. I'm Evan Mack, and today's episode is IRS Substitute Returns. What you didn't file could come back to haunt you. Lance Drury, sir, what's going on?
How you doing, Evan? It's always a pleasure to be here with you.
It's been a while. It's been a while. You good though?
I'm good though.
It's good.
You're looking good, Evan.
Where you at? Where you at? What state are you in right now?
I'm in Ste Genevieve in Missouri. That's my hometown. It's about 50 minutes south of St. Louis. Next week, as you know, I go to California to be interviewed by Jack Canfield, Chicken Soup for the Soul. The week after, I go to New Jersey for a week-long immersion with my growth group, and I'm looking forward to both of them.
Sounds good, though. I can't wait to hear about the trips and stuff like that. We can kind of talk about it and unpack it when you especially have that interview out there in Cali.
Yeah, I'm flying in and out. I'm only staying one full day.
That's good. Yeah, it's gonna be good to hear back though when we hear how it went and things like that. But let's talk about what exactly is a substitute for return or a SFR, and under what circumstances does the IRS typically file one?
Well, I don't know if there's a typical circumstance that they file them. It's like everything else with the IRS. It's pretty much random because they're a bureaucracy. But an SFR is a substitute for returns. That's where the IRS will prepare the form, the tax return for you if you haven't filed. And the problem with those SFRs are the numbers are bogus, but they're gospel until you file. So, for example, if they file for you, they don't give you all the credits and deductions that you're entitled to. And secondly, if you're self-employed, they don't keep track of your business expenses. So I've had people where the IRS said they owed more than $100,000 in a year, and we prepared the return for the client, and obviously they didn't make estimated tax payments. But once we filed, the liability came down to below $10,000. The problem is you've got to get those returns filed. It's a crime not to file your tax returns. The IRS requires that the last 6 years' tax returns be filed and processed in order for you to be in the good graces of Uncle Sam.
Oh, so how does the SFR differ from a taxpayer filed return? What makes it problematic for taxpayers?
Well, like I said, what makes it problematic is they don't give you all the credits and deductions you're entitled to. So merely by filing, you can lower your liability. And again, if you're self-employed, they don't care what your expenses are. They just keep track of your reported income. And obviously, that's going to greatly inflate your tax liability to the IRS. So if you get an SFR 95% of the time, you're going to want to file. Every now and then, we just had this case where we're not going to file because if the client files, it would be much higher than the SFR that was compiled by the IRS. But that's highly unusual.
But Lance, what assumptions did the IRS make when they're creating this SFR?
Well, I don't know that there's any assumptions that they're making. They're just not giving you all the credits and deductions you're entitled to. And again, like I said, they don't keep track of your business expenses. That's on you. They will require, people have to report 1099s to somebody who's self-employed. And so that's what they go by. Obviously, if somebody pays you in cash, that's not going to be reported to the IRS, but you still have an obligation to report that cash, or you're perjuring yourself on your tax returns. You're filing the fraudulent return. So just because you get paid in cash doesn't mean that you don't have an obligation to report the cash to the IRS.
So if someone discovers the IRS has filed that SRF for them, what immediate steps should a person take if that happens?
Well, they should get the return prepared and see if they can't lower their liability merely by filing that return. And like I said earlier, 95% of the time, they can lower their liability. So for the most part, you're going to be better off if you file a return once the IRS files an SFR on you.
Is it possible to replace or override an SFR once the IRS has filed one?
Yes, yes. Once you file your return, that will override the IRS prepared tax return for you. So that if you file that return, then they will go by what the liability is on your return that you filed yourself. So yes, you can override that by filing your tax return.
Is that common knowledge to people? Do you think people know that, or is that something that is that breaking news?
Well, I don't know if it's common knowledge or not, but it sure gets people motivated to file their return because, when the IRS files a substitute for returns for you, they go, "Oh my God, I know I don't owe that much." And so they know that, when I explain to them then, well, that's because their numbers are bogus. They're not giving you everything you're entitled to. But that's how the game's played until you prepare your own tax return.
Are there specific deadlines or opportunities to file the correct return that will supersede the SFR?
I don't know that there's any deadlines that you can do it. I think you can go back 10, 13 years and file your return at that point if you want to. And we've had people do that because it's significantly lowered their tax liability to the IRS. So I don't think that there's any time limitation on filing your tax return. Now, if the return is more than 6 years old and the IRS hasn't filed and you haven't filed, your liability zero. And at this late date, the IRS is not going to go back and file an SFR for you prior to 2019. They simply don't have the manpower or the resources to do that. So if there's no liability on the books, why file your return? Because it's never going to show any liability at this late date.
So, Lance, what about consequences if you ignore this SFR entirely? Is what could happen?
Well, the IRS, now there's liability on the books. Now they can wipe out your bank account, take 90% of your take-home pay. So once there's liability on the books, then they can start the process of trying to levy you. Now, there is, prior to 1998, the IRS did not have to give you any advance warning of a levy.
Wow.
But since 1998, there's due process safeguards in effect. So there's a whole sequence of letters that the IRS has to send to you before they can levy you. And the last letter, the final notice of intent to levy, you generally have 30 days to file the proper legal paperwork to stop the levy. And if you do that, then you're buying yourself at least 6 months to get something worked out with the IRS, because during the time that collection due process hearing, that appeals hearing is pending, they do not have the power to levy against you. So, that's the problem. Once they file an SFR, there's going to be liability on the books, and you better do something or they could wipe out your bank account or take 90% of your take-home pay.
What about this, Lance? Can filing of an SFR accelerate other IRS actions, such things you were talking about, like liens, audits, levies, compared to other unpaid tax situations?
Absolutely. But there's no rhyme or reason to when that occurs. And even when they send the levy letters to you, it might be 30 days between the first one and the second one, or it could be 6 months. As I say all the time, they're a bureaucracy. They're more screwed up now than they've ever been. I've never seen them this bad. So things fall through the cracks at the IRS. So you never know from one case to the other. Sometimes people file their return and they immediately get the first letter in the sequence of letters to levy you. And other times, it could be years before they send any of those letters. So, again, it's hard to tell when the IRS is going to take action. But you got to remember, Evan, there are now 26 million delinquent taxpayers. They don't have enough staff. But this is interesting. I'm just going to throw this in there. Last Friday, they're calling back the 26,000 IRS employees that they laid off. And now my lead attorney in my Nashville office, he told me, and this is going to be the problem, they're not going to come back. a lot of them, because his brother, he said, well, they had me in limbo. They did this. I'm not coming back. And so just because there's 26,000 slots doesn't mean all those people are going to come back, because they want job security. They want to know that, they're going to have a job. And as you know, Evan, their job is dependent upon who's in power in Washington, D.C. So,
That's true.
Obviously the Republicans want less employees. The Democrats want more. They want to step up enforcement. And so it just depends who's in power. And so it's kind of hard to have your job dependent upon who's going to be in office and not to know whether or not you're going to have job security down the road.
Yeah, that's crazy to me though, Lance, because of just based on what you said about the 26 million, like, you know what I mean? Like, they don't have enough people as it is. So I just think it's kind of surprising that they want less people when they're so backed up.
Well, and here's the other thing, Evan. By the year 2032, there's going to be 35 million delinquent taxpayers.
That's wild.
And you're right, because for every dollar they spend on enforcement, they collect $5.
Wow.
But obviously, there's some overreaching on the part of the IRS. You get some revenue officers or even people in the automated collection system, and the power goes to their head, and they don't treat people properly over the phone or whatever. They take advantage of lay people. So there's two sides to this, but obviously I would like to see more enforcement, because I'd have more clients, Evan.
Yeah, I'm about to say, this looks pretty good for you, Lance Drury.
Yes, it would. But I think I've got job security, Evan. We got more than 1,000. We got more than 1,000 clients at any one time, and we're going to have 2,000 to 3,000 at any one time down the road. Because I've told you before, Evan, I'm in the prime of my life. I got to keep growing the business.
Oh, you got to, man. You ain't going nowhere. Maybe I'll keep you around for a while. So, Lance, for someone who has not filed their taxes for several years and they're maybe concerned that the IRS may have already taken that action, what's your most important piece of advice to them?
They need to hire a tax professional right away. They need to get somebody in there that can check out exactly where you're at with the IRS to stop any potential levies, to stop any garnishments, make sure they don't seize your bank account or any other property. So you need to hire somebody right away, because delay, for the most part, is not a good tactic with the federal government.
Lance Drury, sir, thank you so much for your time, as always, brother.
Thank you, Evan. It's always a great pleasure to be here.
Pleasure is all mine. And thank you all for tuning into Resilience and Resolve. If you discover the IRS filed a return on your behalf and you're worried that they might, do not wait to take action. Visit LanceDruryLaw.com to schedule your confidential consultation with Lance and get the help you need to fix it. Be sure to subscribe to the show, like, and share it with someone that might find this information helpful. Thank you so much, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.